Hey fellow traders, Philip Tigerson here from Stock Market Strategy. Before I start, I just want to say that trading involves risk and hard work, so please do your own due diligence before trading for real money. Today I'm going to talk about Fibonacci retracements and extensions. I'll explain the theory behind Fibonacci and then show some charts about how Fibonacci works. Finally, I'll give you some tips about how to best use Fibonacci in conjunction with chart analysis. If you go to a website www.stock-market-strategy.com, you'll find a tab called Education, Technical Analysis, and Fibonacci Retracements Extensions. Here you'll find a written summary including annotated charts. This is made to make it easy for you to keep track of the information. You might even print this page out to have it in front of you while backtesting or writing your trading plan. The Fibonacci sequence was introduced to the West for more than 800 years ago, but we run into the Fibonacci sequence on a daily basis, such as playing cards dimensions, Greek art, computer screen ratios, and etc. Fibonacci numbers are 0, 1, 2, 3, 5, 8, 13, 21, and so on. It's these numbers divided with each other that give us the Fibonacci retracements and extension areas. For example, the 62% retracement is calculated by taking 13 divided with the next number in the Fibonacci sequence, 21. So that's how we derive the 62% retracement. If you want to learn more about the calculation, then visit the website. Now, with any support and resistance, it's important to understand that these Fibonacci levels are more like zones. Price will often oscillate around these areas, so they're not hard reversal points but potential reversal points. It is therefore important to use Fibonacci retracements with other indicators and or chart analysis. Many traders keep an eye on these numbers, and that makes it a self-fulfilling prophecy. Support resistance is about finding areas where you believe price will bounce/reverse off. And you can do this by making a qualified guess that there will be many traders waiting to buy/sell the security at certain areas. For example, if you know the Fibonacci retracement extension levels in advance, you can predict where there will be a larger than a normal amount of buyers/sellers. Here's one way to use the Fibonacci retracement for trading. This is a less known way to use it, but nevertheless it's quite useful. Here we're seeing an uptrend in the stock. We got a Fibonacci retracement placed at the high of the move from the low of the move. We see that we're forming a triangle, but we're forming it above the 38%. This means that the momentum is still strong to the upside because the pullback is less than 38%. So it's almost not pulling back. It shows that buyers are still very aggressive to buy every dip there is. Here you see the same chart, but I've added Fibonacci extensions. So let's continue our trade. We go from the low of the up move to the high and then down to the low of the triangle, the low of the retracement. From there, we predict the resistance areas in this up move. So if we were long, we would look at those areas to see if there was any resistance, so we need to take our profit. For example, here we predicted there would be more than a normal amount of sellers waiting because of the Fibonacci extension. And this is where the self-fulfilling prophecy comes in. We see this bar forming and almost looks like a doji. It opens, push up, push down, push up, and close almost on chains. These bars can be interpreted as a reversal bar. So when you see that happening at your extensions, you got more evidence saying that it might be a good time to book your profit here, or partially profit. Here's a third way to use Fibonacci retracement extension. I've combined the two again, but I'm also using some chart analysis. Here, first, we have our up move, up to the high, and we see that it retraces 38% or around 38%. We also see that the Fibonacci extension from that down move, if people were short, they might take the profit at the Fibonacci 62%. So we got confluence around this area. And to add to that evidence, we also come back to what were resistance is now support. People who went short over here is happy to short cover their position when it gets back to break even. That's why this support is now working. And here we add all three things together to give us a high odds entry. We're using Fibonacci retracement of the overall move. We're using the Fibonacci extension of the retracement move. And we're using normal chart analysis such as support resistance. This gives a high odds trade. This ends today's video. I hope you enjoyed it. Please remember to subscribe to the channel so you don't miss out on future videos. Also, please remember to subscribe to the free newsletter on our website www.stock-market-strategy.com.